Well, good afternoon, everyone. Very good afternoon to all of you, and welcome to this webinar from the British Chamber of Commerce for Italy in conjunction with Finastra, with the support of Crédit Agricole, and in collaboration with AIBE and ASOFintech on FinTech. Trade finance is changing. What will the impact be on local banks in Europe? We've got a very lively discussion ahead of us on a very interesting topic, which will be of interest to a lot of our members, I know. I'm just going to give you a brief preamble, and then I'm going to introduce our speakers. First of all, I'm Tom Node. I'm the Vice President of the British Chamber of Commerce for Italy. I am here in Stephen's place. Stephen unfortunately could not make it this afternoon, but I'm very happy to be here standing in for him. So, is Italy ready for the new digital norm in trade finance? We're living through a period of great change in trade and working for capital finance. Traditionally, this business has revolved around paper documents, invoices, packing lists, etc., etc., etc. The recent COVID pandemic, however, has accelerated the change from paper to a world of digitalization, which is really about the application of new technologies. The drive to digitization in trade finance is driven by corporates, SMEs, governments, and industry organizations, such as the International Chamber of Commerce, because of the huge benefits for all these players and the global economy. Italy, along with the other G7 countries, has pledged to push and legislate for digital trade documents. So, what will be the impact on trade and working capital finance for Italian business and finance? Very relevant and pertinent discussion. So I'm going to introduce our panelists, our speakers today, one by one, and I'm just going to ask them to turn on their microphone when I've called out their name and say good afternoon to you all. So firstly, I'm delighted that we're joined by the first Secretary for Economic Governance of the British Embassy in Rome, Chris Wordsworth. Good afternoon, Chris.
Good afternoon. Glad to be here.
Secondly, we have in our panel conversation joining us later, we have Stefano Ferrari, Trade Finance Director at Crédit Agricole. Good afternoon, Stefano.
Yeah, thank you, Tom. Good afternoon, everyone.
We have Pasquale Sorgentone, the CEO of Business Changes. Good afternoon, Pasquale.
Thank you, Tom. Good afternoon to everybody.
The discussion will be moderated by Aaron Pugliese, who's our Secretary General. Good afternoon, Aaron.
Afternoon. Thank you, Tom.
And I believe we should have with us very shortly Brian Edmondson of Finastra. I'm not sure if he's been able to join us yet for technical reasons. Brian, are you with us? Yes, you are.
I can confirm that I am. A pleasure to join the panel. Thank you.
Good afternoon, Brian. Great to have us. Great to have you with us. And then after that, we have another panel discussion from the fintech ecosystem, and we're joined by Roberto Moro Visconti from ASOFintech. Good afternoon, Roberto.
Good afternoon to everybody.
And lastly, we have Claudia Segre, who's the president of Global Thinking Foundation. Good afternoon, Claudia. Claudia, you can turn on your, I think Claudia may have just experienced a technical problem, but that's okay. We'll hear from Claudia later. I want to remind you all, of course, that this webinar is being recorded. So when you do want to say something, please make your remarks polite, with on topic, and just be aware that it's being recorded. That's all. Secondly, I would like to say if you have questions, there'll be a Q&A session at the very end. But if you want to put questions into the chat while we're going, you can do. I think we have just the chat. We don't have Q&A. We have the chat function, so you can put them in to the chat. Oh, we do have the Q&A. I do see it now.
We do have the Q&A as well.
So we can put it in Q&A or in chat or however you like to roll these days. We're all being experts at Zoom, I know. So with that, I'm going to finish my remarks. There's not much to say from the Chamber's point of view. I think I should highlight that on the 16th of December, we have a Christmas gala in the evening. I'll come back to that at the end. But otherwise, I want to welcome you all very warmly for joining us this afternoon. As I said, a very lively and interesting discussion. And I'm going to pass over straight to Chris Wordsworth, the Secretary for Economic Governance, the British Embassy in Rome. Chris, it's over to you.
Thanks, Tom. And yeah, thanks for inviting me to speak today. I'm very happy to be here, and I'm very happy I managed to get my IT working in the end so that I can actually speak to you. I mean, generally, I think that events like this are really important in maintaining and strengthening links between the British and Italian business communities, trade communities, and between our kind of governments and institutions as well. Really important in encouraging mutual trade and investment. That's a real benefit to both the UK and Italy. So I'd like to thank the British Chamber of Commerce in Italy and Finastra for making this webinar happen. Now, I'm sure you all know, but it's a pretty interesting time in UK trade and financial policy. A lot of things going on, a lot of innovations being made. Her Majesty's government is very keen to use the new regulatory and policy freedoms that we've recently gained to make the UK one of the best places in the world to do business, to invest, and to trade. I'm very happy to talk about a few of those things today. Now, I'm a finance ministry man. I spent the last 10 years working on economic and financial policy at the UK Treasury. And so fair to say that my area of expertise in this field mainly revolves around kind of financial services, financial regulation, and wider economic policy. And so as part of this discussion today, I'd like to touch on three things. Firstly, the kind of bilateral relationship between the UK and Italy in terms of economics, trade, and finance. Secondly, talk a little bit about what the UK is doing to on financial regulation and other aspects to promote fintech innovation and trade in fintech. And thirdly, to talk a little bit about what we're doing more broadly on more traditional kind of trade and export finance policy. If people have any questions, I'm happy to try and answer them. If you've got specific questions on trade and export finance, I'll be very happy to put you in touch with colleagues from the British Consulate in Milan who really specialise in those questions. So anyway, let's start with the UK-Italy relationship. I mean, in pure trade terms, it's an important relationship. I think the Italy is the UK's 9th largest trading partner. The UK was Italy's 5th largest export market last year. I think goods and services exports to the UK totaling about 36 billion in 2020. That's despite the pandemic and everything else that was going on. We've got really strong links between the financial centres in Madrid and London, and there's really strong ties of kind of industrial investment and trade. So I mean, a couple of examples, we can look at the work that Trenitalia is currently doing on the West Coast Main Line and the high-speed 2 rail line in the UK, or the partnership between BAE Systems and Leonardo to develop the new Tempest fighter aircraft. Both very good examples of trade, investment and cooperation between the UK and Italy. And beneath those kind of headlines, I've been very impressed since I got here 2 years ago by the kind of deep personal and institutional ties between Italian and UK business, Italian and UK business people. I mean, the British Chamber of Commerce in Italy is kind of the embodiment of that kind of tie, but also things like the Anglo-Italian Financial Services Dialogue, a joint initiative between City UK and FEBAF, which I've been involved with quite a lot over the last 2 years. I mean, I don't see these relationships getting any weaker. I see them getting quite a lot stronger at the moment, and it's very encouraging to see. And then in terms of the kind of ties between the British and Italian governments in this space, they're going from strength to strength too. I mean, we were talking just before the webinar started about the G20 summit that's taking place in Rome this weekend. And following that, we've got the COP26 summit co-chaired by the UK and Italy. Obviously, the UK has been holding the G7 presidency this year, while Italy's had the G20 presidency. It's the real culmination over the next 2 weeks of this year of presidencies. And I've seen the kind of work between our two governments, including on trade and finance portfolios. And there's been very strong institutional cooperation, very strong sense of camaraderie. And it's really brought to the fore the kind of like-mindedness of the UK and Italy. I mean, in all sorts of areas, but not least in terms of promoting free trade, in terms of strengthening the kind of rules-based international economic system and the trade architecture internationally, and on big financial regulatory issues like green finance, like fintech, cryptocurrencies, that kind of thing. And just going beyond that year of presidencies, I think it was in June at the G7 summit, our prime ministers, Johnson and Draghi, announced work on a new Anglo-Italian bilateral cooperation agreement, which is going to include chapters on trade and finance, amongst other things, investment and trade. And just this month, I think it was, earlier this month, UK Trade Secretary Trevelyan and Italian Foreign Secretary Maio announced a new bilateral export and investment dialogue, again designed to strengthen those ties between our two countries. So this all leaves me very optimistic in terms of the bilateral relationship between the UK and Italy on economic, trade and financial policy. So anyway, moving on, and now is the bit where I do a bit of a plug for what the UK government is doing on fintech regulation and related stuff, and on trade finance. So we've already got some very strong fintech infrastructure in the UK. I think the last figures I saw, we had about 1,600 active fintech firms in the domestic sector, generating about 11 billion a year, employing about 76,000 people in the UK. And in regulatory terms, the fintech sandbox that the UK Financial Conduct Authority launched back in 2015 has been a real success. It's been a real success in terms of supporting domestic startups, in terms of attracting overseas fintech investment and overseas fintech firms to establish in the UK, but also in terms of helping our regulators kind of stay up to date with the latest developments in fintech and keep ahead of the game in terms of their regulatory approaches, making sure they're business friendly and effective for consumers. It's really encouraging to see Italy now launching its own sandbox regime, and we hope they have a similar level of success, a similar positive experience to what we have. Now, the next stage, we're committed to promoting an even stronger fintech sector in the UK, making it more open, more green, more technologically advanced, something that really supports the real economy. I think, as the Chancellor of the Exchequer said earlier this year, if we can capture the extraordinary potential of technology, we'll cement the UK's position as the world's preeminent financial centre. And of course, we're not just the world's financial centre, we are still a major part of the European financial system, and we are very keen to attract, to build on links between London and Milan, between the UK sector and the Italian sector. Now, the Financial Conduct Authority is developing what they're calling a new fintech scale box or fintech nursery. That's going to build on the existing sandbox regime to provide a one-stop shop for growth stage firms who have already had their approvals to operate in the market, but need continued support and assistance in terms of access to information and regulatory advice. They're also launching a new green sandbox to help firms test innovations that support the transition to net zero. And the Chancellor's backed the creation of a new industry-led Centre for Finance, Innovation and Technology, which is going to work with regional and national fintech bodies to promote fintech nationwide and internationally. We are implementing a new scale-up visa stream to allow easier access to fast-track visas for people who already have job offers in registered fintech firms. It should be very interesting. And there's a new fast-track book being put together by the Treasury, the Bank of England and others to look at options to establish a new UK central bank digital currency. Very interesting prospect, including for cross-border transactions and trade, as we're discussing today. Bank of England has launched a new omnibus account to help grant access to central bank money for innovative financial firms that offer to support delivery of faster, cheaper wholesale payment and settlement services. Again, very relevant to this discussion. There's all sorts of things going on. Just to mention two things on the trade side. Department for International Trade recently launched a new FinTech Export Academy to give business advice on legal, tax, regulatory and accounting issues to FinTech firms looking to scale up and trade abroad, or firms looking to invest in the UK from abroad. They're setting up a new FinTech Champion scheme that will tap into a pool of industry talent to provide advice to FinTech firms as they get going and as they try and make those domestic and international scale-up links. So it's an interesting time to be in UK FinTech. So I'll just say a few words about more traditional export finance. I think most people on this call will be familiar more or less with UK EF, the UK Export Finance. It's our main export finance body. It's got over 100 years experience in trade finance, and it supports complex international projects through finance, export credits, insurance, buyers and goods services. And I think last year it provided up to 50 billion. 12.3 billion in support provided to businesses last year, and it's got a capacity of up to 50 billion to provide support through export loans, guarantees, and that kind of thing. And at the moment, it's making real steps towards turning that support green, making all its export finance support compatible with net zero activity. That's a real area of growth. I think the last count I made, it provided export support and guarantees for UK firms operating in over 200 countries and territories around the world, and also provides support for international firms looking to invest in or trade with the UK. So again, I was listening to the budget speech earlier on. The Chancellor of the Exchequer announced the UK's budget in Parliament today, and he talked about there being an age of optimism in the economy as we emerge from COVID, as we start to grasp some of the opportunities of new markets, new technologies, and really build a better future, build back better. And I think I'd share that. I mean, I think it's fair to say that global Britain is open for business, and that relationship between the UK and Italy in terms of trade, finance, is just going to keep on getting more and more important. So I'll leave it there for now. I'm happy to try and answer any questions. Thank you.
Thank you. Thank you very much, Chris. Fascinating. A lot of very interesting information in what you're saying there, particularly with regard to the amount of stuff that's going on in the fintech industry in the UK and the relationship with Italy and the optimism that we all hope will convert into something concrete and actually coming out of this pandemic. As you say, building back better. And one of the key things I think that came out of that was the alignment that we have with the COP coming up next week, and the need, obviously, to ensure that trade at any level is as sustainable and as carbon neutral as possible. And I know that the fintech industry has often been described as a sort of silver bullet to try and help achieve that aim. And I'm fascinated to hear what the panelists have to say coming up. I think we'll hold on. If you can stick around a bit, Chris, that would be great. I think if we can hold off on questions until the end, and then we can sort of deal with them all at once. So I think with that, if I just right now hand over straight to Aaron, and Aaron, you'll moderate the panel discussion. So thank you, Chris, again for your remarks, and we hope to hear from you again slightly later on. Thanks, Chris.
Thank you.
Thank you, Tom. Yes, let me start by joining Tom in thanking Finastra, AIBE, and ASSOFINTEC, both for helping us develop this interesting conference on fintech and on trade finance more specifically, because we need our members to help us address some of these far more technical topics, and Finastra definitely has the background experience to do so very effectively. As Tom was pointing out, traditionally this business revolves around paper documents, and we've got documents such as invoicing, packing lists, trade, insurance certificates, documents of entitlement such as bill of lading, and the pandemic has accelerated a change from paper to a fully digital solution, at least in its ambition. We're working towards it, but like all digital solutions, that if you leave behind even one small bit, the whole chain loses its efficacy, and that link might be physical or it might be in terms of competence. So we're trying to address this huge change in trade finance with the support of our panelists. There are major changes, and these are great opportunities both for banks and their partners. This digitalization is driven by corporates, by SMEs, governments, industry organizations such as the international chambers of commerce, because of the huge benefits, like we were saying, for the global economy as a whole, as well as the interest for the individual players. In fact, as Chris was reminding us, the G7 also recently agreed to a digital trade infrastructure with concrete dates for implementation. But the need to effectively and efficiently leverage technology is key in this process. Some of the technologies being talked about here are the booking engine, a booking engine where all transactions, letter of credits, guarantees, supply chain finance, and trade loans are managed in a bank's central system. Artificial intelligence to reduce the cost and risk of ensuring compliance and automate documentary checking for letters of credit. Documents that are digital at source with proof of ownership and are available to all parties in real time with no waiting for couriers. Blockchain platforms that provide either open account or traditional trade finance products across a wide community of importers and exporters, as well as the banking community. Now, this is a long list of technology, and this is daunting even for larger trade banks, but it can prevent local and smaller regional banks from even thinking about moving towards this new norm in trade and working capital finance. So all this is seen as lots of projects with difficult new technologies and inherent risks. The need to invest in new technological skills, and the result is an increase in the base costs. Today, the panel that we brought together has a wide experience across banking, established technology providers, and the newer fintech that will offer us a perspective as well as an insight to the new challenges to the banking community posed by the move to the digitalization of trade finance. So let me bring in Brian from Finastra.
Hello.
Hello. Brian will offer us his experience and perspective. He has been operating for some decades. I don't want to age you, but in this field, and has seen banks evolve in their digital equipment and approach in the adoption of new technologies. So I think that's going to be extremely useful. And then I would like to bring on Stefano. Just give me a second. Stefano, are you there?
Yep, I'm here.
Okay.
Hello, everybody.
At the spotlight, here you are. Stefano represents Crédit Agricole, so a very established and large financial institution with great experience in this field. And last but not least, I would like to invite Pasquale, who is the CEO and founder of Business Changers, who has a focus on this middle ground between financial institutions and the new technologies, and will help us understand how to cross this middle ground that is sometimes complex. So let me start by asking a first question to Stefano. Do banks acknowledge the move to digitization, or do they have a strategy in place? Did they have a strategy in place, I guess, pre-COVID, or has there just been a reaction to this new pressure to digitalize following the COVID epidemic?
Thank you, Aaron. I would just start maybe borrowing a sentence that probably who has some children in a teenage here in Italy knows perfectly, because it was a sentence said by our former prime minister Renzi. You know this. This is exactly what happened in the banking sector when in 2019 started this pandemic problem. It was first reaction, shock. So this is exactly what happened in Italy, and probably even in the rest of the world. In the banking industry, when everything was closed during the lockdown period, and everything was stopped, you neither were able anymore to communicate or sign anything. Even in the letter of credits where it was not possible to deliver documents. In the guarantees, it was not possible to sign these documents. It was not possible to participate in the tender locally. So this is exactly what happened. It was a disruptive scenario. And banks were prepared, I would say, yes and no, because for sure, in order to reply now seriously to your question, for sure, a digitization process was started, and but it was not a systemic approach that we had in place here in Italy. There had been some transaction involving maybe a totally dematerialized deal in letter of credits. There were transactions which were supposed to utilize an instrument like a bank payment obligation, the BPO. There were transactions between corporates and banks utilizing other instruments that were and are available in the banking industry, like the MT 798, which allows the corporates to communicate with the banks without the paper, so directly to the SWIFT channel. But to be honest, this is not a global approach, and for sure this problem, this huge problem, this pandemic, which hits all over the world, it is helping in getting in the right direction. Just to give you few numbers of what we experienced over the last couple of years, and now today, the volumes in the trade industry fell down around 10% in 2020. This is even lower than expectations, because when people started to think about what was going on in the global trade in 2019, the expectation were that it could even hit much more than that, and going maybe a minus 30%. But at the end, the data that we recorded globally was of a global trade flow less 10%. And in Italy, it was more or less the same, 9.7%. So we were aligned with the rest of the world in the decrease. And what's going on this year is that we are recovering more than this 10%. So 2021 probably is going to close around 12%. So we have a totally V-shaped recovery in the Italian global trade business, which definitely help us. And we can even say that it has been helped by the utilization of a higher digitization processes. This was not probably a reaction or totally 100% reaction to what happened in the market, but it was a continuous progress of decisions taken by single banks. But if you want this process, as we expect, to be totally adopted by all the banks and the system, we need to get to a more systemic, a more global approach to all the problems that, as of today, impacted the concrete, the massive utilization of these digitalized solutions for trade finance in Italy and and even globally.
Thank you, Stefano. Really interesting. Brian, did you want to add something to there?
Yes, I think we've seen recent studies, and in those studies, most banks acknowledge that digitization is going to be a reality, but only about 40% of them do have a strategy in place. And interestingly, about 14% of them believe that they have a fully digitized solution. I suspect they don't. I suspect they provide sticking plaster, ad hoc solutions as a result of COVID. And also, I think there has to be a distinction between the global trade banks, the big trade finance banks, and the local banks. The big trade finance banks, get it. They understand digitization. They understand that digitization is really a byword for the application of new technologies to trade and working capital finance. But as you sort of intimated at the beginning, there's fear, really, I think, from the smaller banks of the impact of digitization to them as organizations, the fear that these will be big projects. And so I think with digitization, certainly for the smaller banks, has to be a realization that they should be moving to more of a service-based solutions rather than trying to apply the technologies themselves, reap the benefits of the technologies without necessarily understanding what a blockchain is or what artificial intelligence is. Just reap the benefits of that technical, those technical capabilities.
Thank you. So the next question is for Pasquale. Question is, has COVID and the acceleration to digitization made fintechs more relevant to corporates, SMEs, and banks? And if so, how? And are banks collaborating, or are they looking to outsiders to provide the solutions? Are they collaborating with each other? Are they collaborating with fintech, or relying on outsiders? Over to you.
Thank you, Aaron. As Stefano said, COVID was a shock, so everybody is aware of this. And COVID profoundly impacted financial systems across the whole world, including the provision of digital financial services, and as well as fintech markets. So those shocks have severely disrupted some sectors, but from the fintech sector was not so huge an impact. In general, despite of unparalleled levels of uncertainty and the rapid changes in the market, the global fintech industry as a whole has been largely resilient in responding to COVID-19. Maybe one of the most resilient economic sector, since it has been adaptable in adjusting business models and product offerings, and being innovative in working with both private and public sectors. There is also an uneven performance of fintechs across verticals, so across functional areas and across geographies, with definitely better results in the emerging economies more than in the advanced economies. That could be counterintuitive, but data says this. And also, fintech markets with more stringent COVID-19 lockdown measures were the markets that reported the higher growth in transaction value. Those numbers come from a study carried out by the University of Cambridge. This study highlighted that the functional areas of digital payments, digital savings, and wealth tech all reported year-over-year growth in transaction volume more than 20%, whereas other areas like digital banking, digital identity, and regulatory tech sectors reported a more modest year-over-year increase of around 10%. So this is going differently from the rest of the market. there is only one functional area of the fintech, that is the digital lending, where things got not well. Digital lending firms reported an 8-year, year-over-year contraction in terms of volume and number of transactions, as well as 6% decrease in the number of new loans issued. This is obviously this is not surprising considering the defaults on outstanding loans during the pandemic, and the businesses and people were not opening new loans. So it's to be completely transparent. From one side, we need to say that there was a growth, but from the other side, we need also to say that despite the growth in transaction volumes, there was a deterioration of margin and profitability, since several fintechs adapted very quickly and lowered their commissions and their prices to their customers. So the question is, why the fintech were able to grow despite the pandemic? Because, as everybody has anticipated during this session, digitalization is a great lever. Because digitalization allows to have an agile business model and to adapt very, very quickly. So this adaptation, the new business models, the new services, a fully digital infrastructure, and also an easy to adapt culture that is inside the fintechs, make those fintechs more and more relevant for businesses and banks in these periods. So as also Finastra likes to say, we live in the open finance era. So in this era, banks and fintechs can and must cooperate to generate the maximum value for their customers. Because open systems create really a world of possibility to maximize the operational efficiency, reduce cost to income ratios, and implement a full customer-centric approach. So in a short, for your question, fintechs are becoming more and more relevant. And also because as COVID accelerated the approach of the digital transformation, this acceleration applies also to the financial services market.
Grazie, Pasquale. Thank you. Thank you very much. So the third question goes to Brian, and it's a short question, but maybe not such an easy answer. Will digitalization change the banking business model as a whole? You've observed this market for a while, so I'm interested in hearing your take on it.
So it's interesting if we talk about traditional trade finance and then the open account world, which when you bring them together really sort of provide the support for trade. For traditional trade finance, I think digitization will change business models, but on a rather rapid evolutionary approach. So we'll see organizations step in that can provide a digital LC, but very much leveraging the legal systems that are in place. There will be some legal changes that will need to be made. The guarantees will also be sort of based on the normal process. So for traditional trade finance, I think that the models will subtly change, and that will be driven primarily for the larger trade banks by the access to data. There's going to be a lot more ability to analyze, to be able to predict trends, to be able to change things. And I suspect they'll be a little bit more agile than they have been in the past, and getting into business areas that maybe they haven't really looked at in the past because they really didn't just have the data in order to ascertain and measure the risk. But for the open account world, I think there's going to be a revolution in terms of business models. And I hate to say this to the banking community, but it won't just be banks that will be providing finance going forward. Certainly to the SME market, which is predominantly revolves around open account. And by that, I mean invoice-based financing. We're seeing new models occur already. Some banks are adapting to them, where really platforms are emerging, and Finastra is building one alongside the ICC, where the focus is on SME financing. I think we heard earlier about the UKEF. I was on a call today with the UKEF, talking to a bank and the malaise that they have that SMEs are just not getting funded. through traditional banking circles for trade finance. So this will be a big change. And for society, it has to be a big change as well, getting finance to the SMEs. So agility through data. So we will see new business models occur there. And by that, I mean maybe getting into new business areas that have not been typically served by traditional trade finance. And here I'm thinking more of the service industries, which is a big export industry for us in the UK. And then readdressing this real problem for trade and working capital finance, and that is getting funding to the SMEs. And if digitization does affect that change to the SME financing, then that will be a revolution, because the impact on economist growth, the impact on financial inclusion, and on all those good things that we like to talk about will be real.
Thank you, Brian. That was quite interesting and quite relevant, because Italy is so strongly dependent on SMEs. And now you brought up the fact that the banks will have to deal with greater competition from other entities, and that is assuming entities are capable of going around the regulation that has protected non-financial in the old sense of the term. So my question goes to Pasquale, to Stefano, about the legislation, and how do you think we have to wait for new legislation before moving to a full digital trade world, or can we utilize the tools that are already in place? What is your take on that?
I think the answer is quite easy, because we have to wait for the legislation. As of today, the instruments that we have in front of us that we are utilizing are not sufficient to go to a fully digitalized world in trade finance. So Tom was mentioning at the beginning the agreement that was signed by the G7, and Italy was part of that. So as of today, we have to now to push down this agreement from a government to the legislators. But this is not the end, of course, because from legislators, then we have to go to each single entity, to each single banks, where the legal office of the banks have to adapt and to check what is possible to do, and how is possible then to manage all the existing processes in order to make it fully digitalized. This is not possible for the 100% of the services today, because we are now probably forgetting even the last part of the chain, which is the clients one, the large corporates, the SMEs, because we can even provide whatever we want in a fully digitalized solution for the clients, but if we do not convince them that this is going to be a plus for them to utilize, it's going to be useless. All the efforts then are going to, and I would say that Italy is probably in this current scenario, because all the banks, even the smaller banks, the local banks, have been trying in the recent years to convince their clients to utilize always more and more a digitalized approach, to maybe to request the issuance of guarantees as well as the issuance of letter of credits. But most of the times, this was not then achieved in the process, because clients still keep on requesting these guarantees, maybe picking the phone and asking to their relationship manager, or even utilize some platforms, because in the market there are nowadays some corporates even here in Italy which utilize the available platform. I'm not going then to nominate one of two of them, but in any case, these are available platforms in the market, and they utilize. But sometimes it even happens that once they put the request, the large corporate maybe to request. Let me just give you a few examples of what can happen. Just put a request of a pricing for the issuance of a letter of credit. Then at the end, maybe some banks who join this platform then put their quotation in the platform, and at the end, the corporate just pick up the phone and call the relationship manager or the trade specialist in charge of this position, and then negotiate on the phone exactly what the pricing at the end will be. So there should be an education of the whole chain. So it's not only the legislators that needs, of course, to take into consideration the needs of the global trade market to be fully digitalized, but then it has to be then pushed down even to the other parts, of the other partners of the chain. Otherwise, we are not going to reach the successful point that we would like to have with a fully digitalized solution. Even the benefit, of course, of what the process fully digitalized would be for all the partners involved in the chain globally, not only, of course, not only in Italian. Just let me just give you one last example on what's going on in the Italian market, and where are the difficulties of putting this market fully digitalized. You know, the domestic guarantees. This is quite a plain vanilla business that you could have in a market. So the issuance of a domestic guarantee, maybe participating in a tender in Italy. So the process in issuance this domestic guarantee is totally regulated from the Italian government. So you perfectly know that what you have to do in the market. You can receive your request, and then you proceed with the issuance of this guarantee. But this guarantee, if it's a tender, it's a public tender, foresees a bid bond. So it's just a preliminary guarantee, the first guarantee. And if awarded, then you have to issue the performance bond. But this performance bond is a commitment to issue. So the bank at the beginning of the request, the issuance, the first issuance phase, already has to take into consideration the fact that you have to book a bid bond plus a commitment to issue a performance bond. This means that the booking of this guarantee is going to be duplicated. So you need to have both the amount of this guarantee booked in the limits of your customer, and in the limits, of course, in the limits of the bank. So this is just a complication, but this is quite common in Italy. So this is a process which is totally common to Italy. I believe it's not so common maybe to other markets, but you have to take into consideration that even in a fully digitalized process, there are some specificity of local markets, some specificity of the market that needs to be taken into consideration. So you have to find a customized solution, even if you work in a fully digitalized scenario. But we are moving to that. I'm perfectly aware that that's, and I'm convinced that that's definitely where we need to go to get, and I hope that in the coming future, maybe even thanks to this pandemic disaster that happened to globally, that we could reach exactly the point that we would like both.
As Winston Churchill once said, never waste a good crisis. So we'll try to treasure this. Thank you, Stefano. Moving back to Pasquale. So as we heard, trade finance has been a lot about documents, about paper, and shuffling of paper back and forth. And you have a lot of experience in blockchain, artificial intelligence, cryptocurrency, smart contracts, and next generation softwares. Can you tell us what technologies, what are the key technologies that will be shaping the new trade finance norm in your opinion?
So as you anticipated, Aaron, financial institutions have long supported the global trade by issuing letter of credits and processing a lot of documents. Historically, the trade transaction were largely paper-based and required a lot of labor-intensive processes. In recent years, however, several technology platform vendors have entered the trade finance space with the aim at digitalizing document workflows, create more seamless trade transaction, and so on and so on. But it's not only a problem of technology. And as Chris said at the beginning of the session, while technology has the power to transform trade finance, there is a problem with standards, with the current landscape, with the current environment. So the lack of interoperability between the platforms resulted oftentimes in siloed data that are difficult to navigate. And this difficulty is particularly strong for small and mid-sized enterprises. So first of all, and we all agree on this, we need universal standards that will connect existing digital islands and will enable the market forces to improve their customer experience, because at the end, we need to improve the customer experience. We cannot rely anymore on phone call and negotiation by a phone call, but we need a more sophisticated customer experience. And so given that standards will arrive, because we talk about this at G7, G20 level, so this first of after will arrive, then technology will be the driver to create the needed level of interoperability. So we have two major technologies. The first one is API, application programming interface, which is not sexy because APIs go around from many years. And the second one is, as you mentioned, Aaron, is blockchain, which in the bank terms is more often called digital ledger technology, because there is a subtle difference between the two, but there's a difference. So digital ledger technology is more private, whereas blockchain oftentimes there are more open connotation, so more permissionless. But however you call, whatever is the name that you use, we need the technology to create the so-called network of networks. So trade finance future will be a network of networks. And only with a network of networks, we will give customers an experience that I've never had previously, because we allow to incorporate multiple levels of information into a seamless view, which is irrespective of documentation, logistic, or of another form of information. So using both API-enabled networks or blockchain, all participants in trade finance can be linked. So we layer new technologies on top of the existing rails. This way we improve the speed and efficiency of trade. And this is even more important because we're talking here about the future of banks that have a lot of challenges, many challenges to face and to overcome. And adopting the network of networks and the right technologies, the bank can remain a trusted source of trade financing and can offer a cost-effective and trustworthy is very important adjective here, solution for business of sides. This is a world that now wants digital services, easy to use services, and want also trustworthy solution. This is the world that fintech and the banks need to address for the future.
Thank you, Pasquale. We are in perfect timing, so if you want to pose any questions, I'm going to ask one last question to Brian, and then we can take some questions from the Q&A if you wish. If not, we move on to the last panel. Brian, from your point of view, what should local and regional banks be looking to invest in to keep pace with the larger global trade finance banks?
I think there's two areas. The first is sort of a direct investment, and the others are more indirect, and I'll come back to that in a minute. The direct investment is to make sure that your internal platform can act as a booking engine, that no matter what source of information or where it comes from, what type of product, you're able to book it in a single system that can link into your other systems that you need to in order to do business, such as book to a GL, book against customer accounts, link to limit systems, etc., etc. So make sure that you're not trying to sustain an old legacy system in the new digital world. It will not work. So that's one direct investment. The others are to, as we've heard already, is not necessarily to jump into a blockchain solution per se, or to get an artificial intelligence expert on board that can help you build out something yourself. I think we're now in a world, as we're hearing, of fintechs, people and organizations that use that technology but can provide it as a service. And I think that's important. So we've heard some of the services that we need and the technologies that we need and the impact that they'll have. So artificial intelligence really does reduce the cost of compliance and also ensures compliance. I'm pretty sure not too many banks that are doing manual compliance checking do 100% compliance checking. It's just not possible. And then we can talk about automating document checking. So reap the benefit of that technology without necessarily investing in understanding that technology. Documents that are digital at source, we mentioned, is key. Proof of ownership is key for digital documents. Easy access to these growing number of external platforms, which are really multi-bank platforms, such as Marco Polo, Contour, WeTrade, Congo, Galileo. The list is growing. Your corporate customers will come to you and ask you to link to those. So you should really have a way of easily accessing that and linking that into your booking engine as well. And then the final aspect which is really interesting, is the ability to move your assets, those trade assets, which are really attractive to non-banks, in a simple easy way into a liquid market. So there are now third-party organizations that can do that. Yet again, they're using blockchain, but you don't need to understand blockchain. You just need to understand that that is a service that is available for you to utilize. And then finally, as we move into this sort of greener economy, is have services that can really prove the provenance of the goods, verify the authenticity of the supply chain, and support really you as you move forward into an ESG-based financing culture. And finally, for local banks, I would say, is play to your strength. Your strength are your customers. Probably a large number of them will be SMEs. Really open up the world of digitization through all these services to your SMEs. And you have a strength for the larger corporates as well. Think about a supply chain finance program where you already have these SMEs as customers and you can really service those larger corporates. So don't be frightened of the technology, I think is my message. Look to the services that provide that technology and the benefits of that technology going forward.
Wonderful. I think that's helpful advice for all the people that are following this webinar and that have to make this kind of decisions and don't have the expertise that the three of you have. So that concludes our panel, and I want to thank you all again for offering your expertise. Now we're going to move on to the last portion of our webinar by inviting on stage Claudia Segre, and let me bring her on board at the spotlight so Roberto Moro Visconti, who is a professor in finance at Università Bocconi, and who's also a member of the Comitato Scientifico of Assofintech, and Claudia Segre, who is president of the Global Thinking Foundation. You both have enormous experience on finance from different perspectives, be it in the more fintech related area or in the more traditional side of finance. So we wanted to come back to you to ask your interpretation of this revolution that is pushing down the door, if you will. And what do you foresee for trade finance and fintech more in general? Maybe we can start with Claudia.
Yeah, okay, so good afternoon. Let me say first, starting with a sort of question, but after I heard the intervention coming from the panel, my main question is how we can make sure that moving into this transition to a low carbon economy in a way that takes into account also justice and equality, as I'm working in a foundation. We are sure we can make sure not to have the most vulnerable behind and also corporates behind, because we know, as was mentioned by Chris, we are facing very interesting time, and Glasgow with COP26, with this cooperation between Italy and UK is a very important opportunity for everybody, perhaps the last opportunity that we have to do something. And what we are observing also from our side, because in our foundation we have an observatory for fintech, fintech for responsibility and fintech for sustainability, is that obviously we are seeing into very important news like the green sandbox and this new regulation coming from Italy finally, and also the way we are interviewing us in order to move towards this interoperability between platforms. But first of all, we have to think about how the banks are facing this revolution, because obviously as my area of expertise coming from in trade finance, when I was working in UniCredit into this department, and what I've seen that traditional banks are not always investing so much in revamping their own trade finance operation, and obviously there is a cost for this, but it's very interesting how they are now working into new business model and moving to a trade financing facility that are very important, considering the high volume of SMEs in Italy and the need of funding for also lower value transaction. Let me add just a contribution coming from a poll that we did with the entrepreneurs of the Italian Federation of Public Service, that are the women entrepreneurs are more than 100,000. And during this poll, the result is that there is no way, they don't know anything regarding fintech platform. They are facing with a lot of difficulties, the digital transition. And so it's very difficult also when the banks are investing into new business model towards entrepreneurs in order to apply ESG also data and requirements. They are facing a group of entrepreneurs that are not digitalized at all, or they are not able to catch the opportunities coming from the fintech platform, and so the trade finance fintechs actors. So that's the idea. So sorry to be so rude, but we have to take into account that unfortunately in Italy, we have less access to broadband internet compared to the rest of Europe. And there is this digital divide that is affecting many entrepreneurs in Italy. And so that's why we are working in order to integrate the international developments relating to fintech for sustainability into the national dimension, because we need to do more, as mentioned by Brian, to move towards a financial inclusion of also the entrepreneurs, not only the individuals and citizenship, but also the entrepreneurs. And particularly because of it will be very difficult for them nowadays in Italy to face the cost of ESG certification, for example. That is very important in order to obtain funds. At the end, we are very positive into seeing this change, and quite sure that in a very short time we will realize an interesting support in terms of framework of laws and in terms of export finance policy. But again, there are some structural problems actually in Italy, and so we are very happy because of this operative tie between UK and Italy, because I think that this will provide the real and concrete push to move ahead also in Italy some reforms and some improvement in our way to see trade finance fintech actors moving into this market.
Thank you very much. Really insightful. Now, last but not least, Roberto Mauro Visconti. Let me, just before passing over to you, say, Claudia, thank you for bringing up the whole topic of inclusion and sustainability, which are very big topics for the Chamber. And it strikes anyone who's attentive to the gender balance as well, how few women there are in the fintech industry and in finance in general. But maybe we can ask Professor Visconti to also offer his perspective on it, because it's not up to women to always be talking on these topics. Men are the majority of the decision makers nowadays, so it's up to them to find some space for other voices. Over to you.
Okay, thank you. Just one precise thing. I teach at the Catholic University, not Bocconi, but I studied many years in Exeter, South Devon, a marvelous place. So I do love England and the UK. And the bridge between UK and Italy can be a very good one, especially for cross-pollination of fintech and technology innovation. England is, and the whole UK, Britain, is running the head, and we are in Italy just followers. But it is a very important field, and especially we want to establish a new technological bridge and a new supply chain, starting from big data and IoT. Then we get cloud computing, we store data, we validate data with blockchains, and then we use artificial intelligence and machine learning patterns to have better analytical skills. Fintechs are very important, and they do cooperate with banks. In most cases, they do similar businesses. In other cases, they are also competitors. Whenever we talk about fintechs, we normally discuss about the payment system. PayPal, Visa, MasterCard, credit card systems are considered to be fintechs. But we also include now innovative business models, considering, for example, again, data analytics, credit and debit cards. Crowdfunding can also be a fintech business, even considered the trade finance. And we have InsurTech, RegTech, regulatory technology, SupTech, supervisory technology, and there is also a new very interesting business called PropTech, real estate technology applied to the financial system, and especially consistent also with trade finance. And we have also asset management, robo-advisor, etc., that fill the gap with what the banks traditionally do. This ecosystem is very important, and the bridging node is represented, as said before, by digital platforms. So we do have a common language that is English, and IT digital platforms that can combine demand and supply of new financial products. Also, one of the main features of fintechs is that they do reduce costs. They cut operating costs that are very important item within the bank's balance sheet and profit and loss account. So you can do the same things or even better operations with less expenses. And this is really a key concept. Also, we are in trade finance, we are developing some new skills, even concerning micro fintech, applications of fintech to microfinance, to sustainability, to ESG, or to sustainable development goals, for decarbonization, for green finance, and for other issues. So this is very important, and we have to follow all these innovative patterns. Startups are very common, and even if fintechs are very different from traditional banks because they don't have such a huge staff, so they're not labor intensive. They don't have a supervisory capital controlled by the Bank of England or the bank or the European Central Bank. But in many cases, they do share the same clients. And this is a very important convergent pattern. So in my opinion, the difference between fintechs and traditional banks is nowadays still huge, but it is going to be less and less important in the future. And also, well, in the UK, you have an issue that is called Brexit. And so regulation is a bit different between the European Union and the UK now. But if we overcome this kind of obstacle, we can understand that what you invent in the UK can be applicable in Italy and elsewhere. So there is a very huge scalability. And thanks to digitalization. And if you can overcross regulatory sandboxes, then you can really apply everywhere your products. And so between Italy and the UK, there is a huge bridge to build, even considering trade finance and the fintech world. Okay, this is in short my message to the audience.
Thank you. Thank you very much, Professor, and my apology for the mistake. You are Professore di Finanza Aziendale.
It's like Inter and Milan. We are always in competition, like football.
Fantastic. Well, thank you for your understanding. This concludes our webinar. I would like to pass it over to Tom so he can do any last conclusions, and if there are any questions, we've respected our timing to the spot, so thank you very much to all of our speakers. Over to you, Tom.
Thank you, Aaron. Actually, I'm going to disrespect our timing and ask a question myself, if I may. Before I do that, I wanted to say it was very interesting what Professor Visconti was saying there about sustainability in particular. And about the use of financial technology in order to help achieve the Sustainable Development Goals. Next week, I'm very proud to say that the British Chamber of Commerce for Italy is leading a delegation to the COP in Glasgow as part of a large climate chamber hosted by the Glasgow Chamber of Commerce with businesses from 10 different British chambers of commerce from around the world. The Italian contingent, I'm glad to say, includes Finastra. We're really proud of that and delighted that Finastra is coming along with us and leading the charge in terms of trying to make a more sustainable world and reduce carbon emissions so that our children and grandchildren have a planet to inherit. Finastra, of course, as has been pointed out, is actually one of the providers of digital solutions to more than 900 financial institutions, including many of our top members, HSBC, Barclays, and of course, Crédit Agricole. So we're delighted that Finastra is joining us for that mission. I guess I want to ask one question related to that, because the Sustainable Development Goals point to 2030. And the achievement of most of those goals is intended to happen by 2030. So I wanted to ask something related to fintech. And actually, if I can ask each of the panelists, we'll start, I think we'll go in reverse order. So we'll start with Professor Visconti at the to begin with, and we'll go back all the way back to Chris Wordsworth. If you could identify one major innovation or step forward in the next 8 years, which you think will be a real game changer, one major piece of innovation, what would it be? Or alternatively, is there one major obstacle in Italy or in the UK or wherever to achieving that goal? So I'm going to pass through all of you. So if I can start with Professor Visconti and ask you that question, and then I'll go backwards.
Sorry, what were you saying? Can you repeat?
My question, Professor, is looking towards the end of the decade, when the Sustainable Development Goals are supposed to have been achieved by 2030, I want to ask, in the context of fintech, do you see one particular innovation in the fintech industry which will be a real game changer, will change the scenario, or do you see one particular obstacle which you think will be really critical in achieving change over the next 8-9 years?
I see a lot of opportunities, especially to cut costs with digitalization, especially in backward areas of the world that pass from an oral culture to a digital culture without having a written culture in the mid. And this is very important. We have an example from what we call M-Pesa. M stands for mobile. Pesa in Swahili is savings in Kenya. They have 8 million clients. They just use mobile phones to exchange money with no bank branches because they are too expensive. And this is working very well. And this is a form of fintech. And the language, of course, is English in the East Africa side. And so this is very good and is a remarkable example. Also with microfinance, the main issue is to cut down costs. If you have huge costs, you're not sustainable. If you improve sustainability, then you have a better and larger outreach to the poorest. You can reach out more people because your costs are lower. And this is very important. And also there is a pollination with a top-down and bottom-up approach. Top-down, from Italy or from London, from Milano, we invent the system. But then there is a bottom of the pyramid feedback from the poorest parts of the world with innovative solutions.
Thank you, Professor, and that ties in very neatly with the climate justice angle, I suppose, of the sustainable mission, and actually ensuring that the rollout of sustainable solutions is not just shared amongst the most privileged nations of the world, but goes throughout the world to those nations which are going to be hit hardest, for example, by the change in climate over the next 100 years or so. Thank you very much, Professor. I'm going to pass, if I may, to Claudia Sego now for time. Claudia, do you have anything you would like to share in terms of one major innovation that you see will be significant in the next 8 years, or one major obstacle?
I think she might have had some connection issues because I don't see her.
Okay, well, we can pass back then. So let's go to Pasquale Sorgentone. Pasquale, that question to you, if you're still with us.
Yes, Tom, this actually is a great question, because we always need to look ahead. And I think we have a big opportunity, which is also a challenge at the same time. We need financial inclusion. We have today more than 2 billion people in the world that have no access to the financial services. And you can imagine what can be putting on the financial world 2 billion people. This is a great growth for the entire planet. If we do not do this, we increase the gap between the advanced economy and the emerging economies. So I think this is a duty that everybody of us has to follow. So financial inclusion for everybody.
Thank you, Pasquale. And that ties very neatly in with what Professor Visconti was saying in terms of justice, really, and there's sort of financial justice, if we like to sort of use a phrase. Great. So if I will pass then to Stefano Ferrari. Stefano, if I can ask you that same question.
Tom, thanks. I think that I would summarize with one sentence. I have a dream. Probably someone said it before me, but I still have a dream, which is from a banking perspective. I'm not sure that this can be in any case achievable at the end of, but a global repository where all the banks can find all trusted information on a global basis would definitely be a disruptive solution for all the banks. In order maybe where you can find information on all the corporates all over the world, that all the banks can put together the informations they have, and the other banks consider this information as already trusted, compliant with regulations and whatever it is. So this is my dream, because I always face this kind of issues in day-by-day activity, but at the end, that would be my turning point. I would say, in case to better our activity for not only for banking, of course, but even for the whole chain, as I was mentioning before in my intervention, that this is simply something that should take into consideration all the partners of the chain involved in this optimization of the global trade scenario.
Super. I mean, I think credible, reliable information and the sharing of it is not just a challenge, as you say, for the banking sector, but for the entire human population, as we see on a daily basis in these last few years. Where can we get reliable, credible information that is should we say, fact-based, as the expression goes? Great. Thank you very much. Brian, can I ask you the same question?
A cheeky answer. And that is that the problem is really going all the way down the supply chain, right to the origin of the supply chain. I think trade finance typically just goes down one level of the supply chain, doesn't really get any further. So two aspects. One is, we've already heard, is the financial inclusion of SMEs all the way down through the supply chain. There are some that we're already seeing now, and we're working with a lot of fintechs to do this, but will become very, very significant. And that's something that we call provenance checking. So we have some specific fintechs that, so there's one that checks the origin of tuna all the way back from where it's sourced. So you know that it's been sourced in a good way. Another is checking on palm oil with a company called Halo Trade. So we know that the palm oil has come from a sustainable source all the way to the origin. And these are fintechs capabilities that are already there that we as Finastra can plug into and provide that information and consolidate that information through to banks. So provenance, I think, is the key. Not just words, but real provenance and truth about the sustainability of specific supply chain.
That's excellent, Brian, because that links the very last two things we were talking about. Firstly, helping the very lowest end of the supply chain, the very end of the supply chain, but also reliable factual data. So you've linked the two things extremely well. Very interesting indeed. Thank you very much. Thank you to all of those panelists. And one, I will just now pass Chris. Are you still with us?
I am. Thanks, Tom.
Well, Chris, can I pose that question to you? Maybe, I don't know if the UK government has a specific aim for the next 8 years in terms of fintech or any particular obstacle that it regards as particularly important. But
I mean, I think that there's one definitely worth mentioning, and in a way, it's in agreement with what Stefano and Brian and some other people have been saying. I think what we face here is a really big informational problem. I mean, so we need private finance if we're going to make the transition to net zero. I mean, what governments are committing from public funds is good, but we're going to need private finance. There's no doubt about that. And if you look at the kind of appetite for ESG and green investments over the last few years, the value of green bonds issued, it's kind of exponential growth. But we have a problem in that we have no kind of agreed standard for judging what is ESG. We have a problem that we have no kind of consistent set of rules for reporting what is ESG or what the carbon impact or the environmental impact of firms' activities is. And as Brian said, that goes down the supply chain. How do we measure the carbon content of a product from start to finish before it reaches our borders for import or before it's produced in our own countries? So that informational problem makes it really hard to have a proper functioning and vibrant green finance market. Now, in terms of what we can do to fix that, I think it really is quite encouraging that we can point to a lot of the things that are going on in the G7, G20 and COP26 presidencies at the moment. And the UK is doing a lot of this stuff domestically as well. But if we think about working towards agreed green taxonomies, work that the EU has been doing for a long time and which the UK is doing as well, on how we define the carbon and environmental impact of goods. If we can agree green taxonomies, agreeing common reporting standards. So if we look at the stuff that the UK is implementing on TCFD, mandatory reporting standards, or what's just been endorsed at G20, and we hope will be endorsed at COP26 next week on the ISSB, International Sustainability Standards Board, to create basic international baseline standards for what is considered green, environmentally friendly, or ESG. And then looking at how we kind of implement that and take it to market and provide that information to retail investors, to institutional investors. I mean, if you can address those things, I think you really do unlock a lot of potential. And combine that with some of the stuff that I think Claudia and others were talking about financial inclusion. How do you extend the opportunity to invest to the greatest number of people? I mean, I have an investment ISA, which I run through an online app, which is very user-friendly, which provides investment opportunities for people who 10, 20 years ago would never have been able to get into the stock market or investment funds. And through that, you can start investing in ESG and green. I think that's what we need, is providing that regulatory framework, those common international standards and that information so that people can put the money where they want it to go.
That's terrific. Thank you. Thank you, Chris. I see, so many common themes in what you've all been saying in terms of a democratization, if you will, of the financial system, making it open to people from all walks of life and certainly to those who have had up till now very limited access to capital for their businesses, and also just a simple banking system so that they can get a foothold in the world and live a better life. The universal standards question absolutely goes back to what Pasquale was saying. I think the phrase he used was universal standards to connect digital islands, which is a great phrase I really like, which I think applies, as we know, to the ESG standards, which hopefully out of COP26 we'll see some kind of regulatory framework which is shared between the nations of the world coming out. Anyway, I want to end there because we're on the dot pretty much at 6 o'clock, and that's where our webinar ends. I think it's been a fantastic, very thought-provoking webinar indeed. I want to thank all our panelists for joining. I want to thank our audience for joining us this afternoon. It is recorded, so anyone who has missed it will have the chance to see it in a few days when it is uploaded onto our website. Very lastly, I just wanted to reiterate, on the 16th December, we have our Christmas Gala in the evening. You're all very welcome to attend. That will be in person, not digitally. We are pretty much hopefully sure. So thank you very much, everyone. I wish you a very good evening, and I look forward to seeing you all again very soon. Good evening.
Thank you. Bye-bye.
Good evening.
Bye-bye.